Hello and welcome to the presentation on Innotech. Our slogan is Soaring Above the Competition, and I think we will show that our marketing strategies throughout the last 8 quarters allowed us to do just that. We'd like to start off with our brand management strategy. We closely monitored our product reviews, and we had a focus on meeting customer needs and use patterns. We actually based our initial product design on market demand in our chosen markets. We began with products that were created to target the traveler and workhorse segments. Our original products were ranked in the top 5 in brand judgment after quarter 3, and by the end of quarter 8 we had the highest rated product in 4 of 5 market segments. Along the way we introduced 6 new products in 8 quarters, which is tied for the most products by any single company in the market, tied with Ferris and Galaxy. In order to stay ahead of the curve and among the top products on the market, we quickly recognized the importance of and began investing heavily in research and development. In all, we invested $22,314,169 in research and development across 8 quarters. We developed new products, which was key to Innotech's success. We carefully observed the demand for each segment and the customer's needs, and we produced at least 2 products that were rated in the top 5 in 4 of the 5 market segments, maximizing our total market share potential. Brand judgment. To highlight our brand dominance, the following charts show the brand judgment scores for each product segment and what score each of our brands was given. As you can see, our company provided products which excelled in more than one category. We made sure we delivered customer needs, keeping segmentation in mind, but also delivering products that were diverse and cross product lines to capture more share. In the cost cutter market, we had the Condor 5, which was the highest ranked cost cutter with a 96 overall brand judgment, and we had the Quail 4, which was the 5th highest ranked with an 83. In the innovator segment, we had the Peacock 2 and the Falcon 1, which both tied along with another competitive product for first in brand judgment with a perfect 100. The Peacock 2 was also the highest rated Mercedes brand with a score of 82, and the Eagle 2 product came in the 5th highest ranked brand with a 71 in Mercedes. In the workhorse segment, we had the Condor 5, which got a 94 overall rating, and in the traveler segment, the Swifter 4 and the Falcon 1 were the number 2 and 3 highest rated brand offerings respectively. The Falcon 1 was a high-end laptop which sold well in both the traveler market and was a leader in the innovator market, and as you'll also notice, the Condor 5 was a crossover product selling well in cost cutter and workhorse. Pricing and advertising. For our pricing strategy, we closely monitored the price judgments to make sure we met customer expectations. We also charged a premium price in the market to ensure we kept high margins. We focused on the price point the customers were willing to pay and how happy they were with our prices, and did not pay much attention to the prices of our competitors. We paid attention to what the customer wanted, not what our competitors were delivering. Rebates were also selectively applied to help drive a perception of value for the low-end or new models that were entering competitive markets. In our advertising strategy, we steadily improved ad copy judgment to where Innotech was the highest rated ad in every category. In ad copy judgment, we were the highest in cost cutter with an 87, innovator with an 87, Mercedes with a 97, traveler with a 98, and tied for first in the workhorse with an 84. When there were not many sales offices open in a region, we'd invest heavily in local media for a specific sales office. As more sales offices opened in a region, we would invest more money in regional advertising. We chose an advertising mix of a small amount of high cost but highly effective ads and a large amount of low cost and mid to highly effective ads, as noted by customer media preferences. When we launched either a new product or opened a new sales office, we'd launch a marketing campaign for that city and try to blitz the market. This helped create a buzz and get our name into a new market, helping us to provide immediate returns on our investments. We did this by investing a great deal more in advertising in a new city or new product than in other cities or products that were already well established in the marketplace. Sales management strategy. Our goal was to reach every market in 2 years, and we began that goal early in Q3. This early expansion was a huge source of competitive advantage for us. We used the market size to determine which new office would provide the best return on investment dependent upon the brands we had available or those we expected to launch. When determining the size of the sales force, we had a standardized number of sales and support personnel per office, which was dependent on the size of each market. We had standardized ratios for the various size markets depending on if they were large, medium, or small. Ratios were fairly consistent across offices, and we grew the sales team to support demand within each market. We maintained a ratio of 5 salespeople for every support person that we had in our offices, and there was always a floater sales rep in each market to help support varied demand. We utilized standard promotions and sales force incentives, including the training program, vacation packages, standardized training across locations and products, as well as cash bonuses for the highest profit products. Financial analysis. Early in Q3, we started our strategy of expanding into new marketplaces by opening 2 new locations, and we invested heavily in a large sales force. We continued to invest heavily in new sales offices, a large sales force, and putting large sums into quick R&D at the expense of our short-term profits. We started to make a profit in Q4, and we used our successful market position to increase our market dominance by putting that money back into the business. We carefully selected our early R&D decisions by comparing the available R&D options with our long-term strategy and purchasing those options which would have maximum impact and quickest returns for us. Again, our net profit took an initial hit, but the advances in technology paid for themselves rather quickly. As the bullet says, the time to the market was more important than the cost. The quicker we could get the product out to the market, the quicker we recoup our costs. We tried to make smart early decisions, spending money to expand into untapped and low competition markets as we honed our strategies and our brands. Our early success at tapping into these markets gave us the financial leverage to enter the larger, more competitive markets later on, but with extremely powerful brands and the money to blitz the market with mature advertising and sales strategies. Financial performance. The orange chart on this slide shows our financial performance from Q4 to Q8. As stated in the previous slide encircled here, Innotech was able to quickly turn a profit by Q4. That early profit and our effective marketing strategies allowed us to invest heavily in R&D and sales office expansion. As you can see in the black bolded lines in the middle, you can see where we did our sales force and our R&D investments. From Q5 to Q7, we upped our investment in R&D to ensure that our brands were the leading brands in the marketplace. You can see in Q5 we went from $4.2 million in investment to $8.2 million in investment in Q7. The corresponding rise in revenue from this R&D investment offset the spending, and by Q8 we had made $27.1 million in profit and a cumulative net profit of $47.7 million across 8 quarters. Innotech is the leading microcomputer company in the market, and we believe it is poised to continue to hold that position well into the future. Thank you very much for listening to our presentation. Have a great day.